Okay, everybody, here we go. It's me, Gregory Mannarino, Sunday, May 5th, 2024. This is my newest segment of Markets, A Look Ahead. Now, I want to talk about a few things with you, but let's just focus for a moment on what is going on here. What do we know is happening right now? And there is no way to argue that this is not happening. I am talking about, again, we are in a full-blown liquidity crisis, a debt crisis, one and the same on a grand scale. As a matter of fact, there's been nothing close to this in history or any other time. Okay. Knowing this, there are a particular set of dynamics in place that are there for one reason and one reason only, to keep this thing going. And all it is doing is manifesting itself in a way that is going to be extremely destructive for every person on this planet here. In case you don't know, this is the most sick, twisted environment we've ever seen. And you're well aware of that if you've been following this blog for any length of time. What we're witnessing now is yet another mechanism to keep the system propped up. And in order to do this, and we've spoken about this before, but again, we're going to talk about a few other things here that are going to maybe hopefully outline for you how important it is to be taking action right now. And that's what this channel is all about. Taking action. It's not about being entertained. It's the truth. Sometimes I go off the deep end here and there. It's just my coping mechanism. But in my opinion, right now presents opportunity. And that's what this is about. And not just opportunity from a financial standpoint. Okay, because although this is a financial Wall Street kind of, blog here, it's much bigger than that. It's about all of us coming together and understanding who our enemy is, what they want from us, and realizing how important that we are to each other. We need each other more than ever moving forward. Again, this is going to end very, very, very badly. And if people can't see what's going on, like I said recently, they're willfully ignorant to this. I get a lot of feedback from thousands and thousands of people. Oh, Greg, I've been hearing this story forever. Nothing is going on. Nothing is going on, really? Are they not paying attention to what's happening here? Don't they see, honestly? I mean, how much more proof do people need to understand that, again, not just a phenomenon here in the United States, but around the world, the economy is being systematically destroyed by central banks who are dismantling it. Piece by piece by piece, taking the people along with it, the middle class for the most part, the people on the bottom rung of society. They're done already, okay? They're already slaves to the system. The people in the upper echelon, the 1% and 2%ers, they couldn't possibly be doing better than they are right now. The system is designed that way, okay? And I'm going to say it again. When you hear anyone talking about a trickle-down effect in the economy, how if the super rich do great, everyone else benefits from that as it trickles down like urine down a leg. I'm sorry, that's not the way it works. How the system works and is designed to work is to suck everything that can possibly be sucked out of the middle class and push it right up to the 1% and 2%ers. So just so you understand, when you hear the trickle-down economics, you're listening to someone who is either deliberately trying to mislead you or has no idea what's going on here. I think that's pretty obvious. All right, anyway, so going back to looking ahead here, it appears to me, and it should appear to you, that more easy money is going to be pushed into the system. It's going to be created out of nothing and pushed into the system. What does that mean? The global debt situation is going to be compounded, monumentally worse moving forward. And that means with regard to the markets, we're about to see distortions get even more extreme than they are right now. And if you do subscribe to my free newsletter, this is in your inbox right now. It's free, people. Please subscribe to my newsletter. You got nothing to lose. You got everything to gain. I put out a lot of stuff here for all of you. And I want to cover some of this right now. And put a light on to what's going on, what we can expect moving forward, and what we need to do about it. It's pretty obvious. Continuing to bet against the debt, becoming your own central bank, making the right alliances with people here, coming together. Don't let them separate you. Again, their mechanism here, it's always been the same since time immemorial, and that is to keep people divided. This is how the few have controlled the many since time immemorial. We're not going to allow that to happen. You see, we are going to come together. That's the truth. Anyway, so let me cover this with you. It's in your inbox. I want to read through this as I said. So anyway, markets. Expect extreme distortions to get much worse from here, and this is why. These things are gold, all right? Again, this is why I put them out for you for free, because I feel like information is power, and it allows you to make the right decisions moving forward, period, the end. Anyway, now I'm going to make some references here to the MMRI, the Mannarino Market Risk Indicator. That's the most recent number here, way down from its recent peak of 300, almost 310. Anyway, so let's talk about this and how we can, again, come out of this the best way possible. So back in 10/19/2023, the MMRI topped out at 329.2. That was the MMRI's all-time high since I created it and published it with regard to market risk. Now, if you look here, I did circle the all-time high. Okay, back in again, that was on 10/19/2023 here. All right, anyway. So, on that day, the Dow Jones Industrial Average fell 250 points with the other major averages lower. Now, not a big deal, right? But on the run-up to MMRI peak, to that peak of 329 here, the stock market and the Dow Jones Industrial Average suffered a series of losses when the Dow topped out at 37,710, correlating with the MMRI, okay? From that time, the Dow Jones Industrial Average topped out at 37,710 with the MMRI hitting 329.2. The Dow Jones Industrial Average lost 4,296 points, a loss of 11.39%. Nothing monumental here, nothing out of the range of what should be considered normal. Again, and this was just recently, the MMRI crossed above the 300 red zone extreme risk line, and the stock market averages performed poorly. We've been following this. Just this past week, now this is where this gets interesting and where we need to pay attention. Just this past week, we heard from World Control, that's what I call the Federal Reserve, who made it very clear to the market that rate cuts / more easy money is coming. It is coming. With that, why is more easy money coming? Because that's a central bank's power. It resides in one thing and one thing only, and that is their ability to inflate. Why do you think, honestly, let's kind of, think about this for a moment here. The world today is flooded in debt more so than it's ever been. Meanwhile, there is a debt deficit. There is a debt deficit. It's a liquidity crisis, meaning we're running out of cash. This issue I covered recently with ATMs running out of cash. This is widespread, by the way. I have heard from hundreds and hundreds of people from all over the world who are telling me the same thing. So something is going on here with regard to ATMs. People are pulling their cash out of these institutions, of the banks. They don't want a face-to-face confrontation. So they're going to the ATMs and withdrawing cash. These ATMs are being sucked dry. People are being forced to go into the institutions and pull out cash. Okay, that's what's going on here. So anyway, with that, the MMRI has cratered with the promise of more easy money. It's kind of interesting. Think about what I'm about to tell you. A simultaneous rally here in the debt market and the stock market. Who's buying the debt? The Federal Reserve, obviously, is a buyer here. Okay, that's how a central bank keeps rates low. They can't just say it. They have to get into the market and make it happen. But the Federal Reserve is hoping that by saying, hey, you know what, we're going to be cutting rates, it's going to spark a rally in the debt market. Why? Because, again, how the debt market works is kind of inverse to the stock market. A rally in the debt market is bullish for people who are buyers of debt. So the Federal Reserve is trying to, very successfully, it seems, as of late, we'll see how it plays out, spark this simultaneous rally, and I think it's going to work. But there's always that outlying black swan event. Again, no one can put a finger on it. No one can point a finger at it. If it's something that you hear about, it can't be a black swan. You understand? The build-up to the big show over the skies of Israel, that was broadcast to the world to protect the markets. You have to understand. We all knew it was coming. We called it right here. Everyone knew it. This is no surprise. This is where the markets took it in stride. And a lot of you thought that was going to be the black swan. No, can't be a black swan. A black swan is something that no one sees. Anyway, so the MMRI cratered, falling from a red zone extreme risk of 309 to an amber zone high risk of, well, where we are right now. Okay, and this is obviously driving cash into the stock market. I fully expected that the Fed would start cutting rates as soon as June. However, people, the probability of a rate cut in June has definitely dropped because of the current situation here, and I want to talk more about that. Hold that thought for a moment. With regard to the Federal Reserve, I want to talk about this. This was a poll that I ran recently for all of you. Okay, talking about how the Federal Reserve has been wrong 100% of the time with regard to their projections of inflation. Now, I want to read this to you. In your opinion regarding inflation, as we know, every single projection which has been made by the Federal Reserve has been wrong. I write, how is this even possible? If they were throwing darts at a board, they would have a better chance of, how could you be 100% wrong? Doesn't make sense. Every single time, month after month after month after month after month after month, after they call it transitory and temporary, obviously something else is going on. Unless they are being deliberately misleading, do you believe, this was my question, that the Fed is deliberately putting on information which they know is wrong? Or is it just a coincidence that the Fed has been wrong 100% of the time regarding inflation? 95% of you, and this was over 3,200 people participated. 95% of you believe that the Fed is deliberately being misleading, putting out fake information. 3% of you believe it's just a coincidence that they have been wrong 100% of the time, and 3% of you voted other. But 95% who participated said this is deliberate. I believe it's deliberate as well. In fact, I have no doubt about it. Anyway, why? Why is this situation changing with regard to the Federal Reserve and when they're going to cut rates? Inflation, according to their own numbers, continues to surge, more so than every single projection from the Fed. They've been wrong 100% of the time. This is just by accident, really. Do you find it at all perplexing? I think that's a good word. That the Fed has gotten every single one of their inflation projections wrong? The fact is this: the Fed has been deliberately misleading and feeding false information to you and me. And you know why they can do that? Because there's no accountability. Absolutely zero. Not one of our caring representatives, nor anyone running for president, has called out the Federal Reserve on this. Do you find that interesting, disturbing, pukable? Is that a word, pukable? Let me know. Anyway, so here I break this down, the probability of a rate cut moving forward for you. The current probability of a June rate cut has now only 30%. For July, it rises to 45%. For August, 65%. And for September, 85%. That's where we stand right now. With the upcoming Fed rate cuts, according to those probabilities just read to you, you can expect massive and continuing price action distortions across the spectrum of asset classes to persist. It's already here now, but it's going to get monumentally worse. The mechanism of suppressed rates drives cash into risk assets, inflating a stock market bubble. It pulls cash out of assets where it should be going into. For example, commodities. That's not where cash goes in a risk-on environment. Risk-off is coming, where this whole thing is going to melt down, and we're going to see the price action of commodities and I believe cryptocurrencies and other assets as well skyrocket, more so than anyone can possibly believe. The coming vast expansion of debt should be enough to inflate the stock market far beyond its already hyper-bubble state. And you can expect currency devaluation / loss of purchasing power to worsen. You're also going to hear nothing about this from our loving, caring representatives or anybody running for president. Our current imbecile sitting behind the Resolute desk, he has no idea what's going on. But President Trump does know. Is he going to tell you? No, he's not going to tell you, unfortunately. But that's just the way it is around here, people. Just get used to it. It's you and me. It's you and me against them. You have to understand that, okay? If you think that anyone else is looking out for your best interest besides you and me, of course, you are grossly wrong. No one else is looking out for your best interest. You got to look out for yourself, the people you care about. We have to come together as a community here. What do I tell you every Friday? Love each other, care about each other, be charitable. Period. This is it. And we're at that moment right now. Anyway, I hope you got something out of this video. I really, really do. Again, please, if you haven't yet, subscribe to my free newsletter. I don't get anything out of this. It benefits you, not me. I take the time out of my day to write these articles for all of you for free. So you can stay ahead of the curve here. Anyway, that's pretty much it, people. Keep your eyes on the MMRI. Free, again, to everyone that wants to use it. There's a link in the description of this video. The lower this number goes, the more apt the market is to rise. Cash is going to make its way into the stock market. If we get back into a red zone, you can expect the market to fall under pressure. It's an amazing indicator, and it works very, very well. All right, people, look, this guy here loves you from the heart. I mean that with all I got. I really, really, really do. Please enjoy the rest of your day today. Ponder the things that we talk about. If you got something out of this video, I'm going to ask you for a favor. Thumbs up. Give this video a thumbs up. Share this stuff. Get it out there. Let's wake up some more people. We have to do this, okay? All I want to do is make a positive difference in the world. That's it. And I think we're making a difference, you and me. We really are. We're a team. We are a worldwide family. And it's a privilege to be here. It's a privilege to be kind of like the daddy of this entire thing. I'm honored to be here. And my responsibility is to you, all of you who follow this blog. I got your back. Count on it. I got your back. I will never let you down. I will see you tomorrow in the morning, okay? So until that time, please take care of yourselves and take care of each other, all right? See ya.